Part of the application process at a Community Futures offices is the requirement of a business plan. When it comes to completing a business plan, most new entrepreneurs get stuck at the financial projection section. This is the section where we ask you to project or predict the amount of sales you think you will achieve and what expenses you will incur. Yes, it can be daunting, but not impossible. Let's start with a break-even model. What we're going to do here is calculate your expenses first and then determine what you will need in sales just to cover your expenses. Remember, you haven't turned a profit in this scenario, but just covered expenses. Let's look at a typical profit and loss statement or sales and expenses sheet. We're going to start with expenses. Breaking it down further, we will divide it between fixed expenses and variable expenses. The best definition of fixed expenses is those that you have to pay regardless of having a single sale or opening your doors. They have to be paid every month. Your variable expenses are more flexible and usually depend on your sales. You can either scale back on them or increase them depending on your financial situation. So on this spreadsheet, your fixed expenses are legal and accounting, bank charges, business license, insurance, rent, telephone, utilities, and wages. How do you determine these costs? Simple. Call a lawyer, bookkeeper, bank, town permit office, insurance company, potential landlord, phone company, and power company, and ask them for quotes. Wages are a bit trickier. Let's say you're going to pay one person $10 an hour for 30 hours a week. You may think that my expense projections will be straightforward at $300. But remember, in Canada, an employer has to pay an employee's employment insurance benefits, Canada pension plan benefits and vacation pay, as well as work ban compensation premiums. This usually adds another 20% to wage costs. There is help to determine this as well. Go to Canada Custom and Revenue's website. They have a calculator to determine these costs, as well as workers' compensation premiums. Okay, let's assume we've made our calls and got our quotes and calculated wages. We'll fill those in and move on to variable costs like advertising, freight, garbage collection, and travel. This is the part where you will have to guesstimate, but there is still help. In advertising, if you're going to have a sign, mail-outs, radio ads, etc., you can still get quotes. If you're going to bring freight up once a week, a freight company can give you a quote. Remember, these are variable costs, so we can adjust them up or down based on business sales. We made our calls again and put in our numbers. So it looks like our total expenses are $3,400. I guess we have to make the equal amount of sales to break even then. Not quite. One last expense is called cost of goods sold, or COGS. There is a cost associated with wherever you sell. If you sell children clothes, what did you buy each piece of clothing for from a wholesaler? If you make pizzas, what did each pizza cost you to make in terms of ingredients? Again, some basic research can help you determine these costs. For this example, we will assume that cost of goods sold will be $1,500. So adding that $1,500 to our $3,400 in fixed and variable expenses will total to $4,900. Once you have taken these costs into account and deducted them from your sales, now you will know your break-even point each month. So you would need to sell $4,900 each month of goods and services just to break even. We know this takes some effort, but it is worth it. Not just for getting financing, but helping you in deciding if this is a viable idea from a break-even point. If you have to have sales of $5 million in pizzas in a town of 1,000, is that feasible? Probably not. The next video will help you determine some realistic ways of determining how many people will probably buy your product.